Arthur Andersen, Integrity to Disgrace. Arthur Andersen Company was founded in 1913 by Arthur Andersen and Clarence Delaney in Chicago, Illinois. Arthur Andersen was born May 30th, 1885 in Plano, Illinois, and was orphaned at the age of 16. Andersen began working as a mailboy by day and attended school by night. He eventually was hired as the assistant controller for the Alice Chalmers Corporation. Mr. Andersen focused on training and education as a means to set and maintain very high operational standards for his employees. In a 1932 speech, he argued for business ethics, saying, quote, "If the confidence of the public in the integrity of accountants' reports is shaken, then the value is gone," end quote. So he was doing this to maintain the integrity of reports. And Andersen is even reported to say that he valued integrity over profit. Arthur Andersen led his company with a focus on internal training and insisted on a comprehensive and consistent approach when dealing with clients. Andersen's obsession with consistency would eventually become known as the one firm concept, and that was the idea that no matter where you were in the world, that if you were a client of Arthur Andersen, you could expect this to get the same kind of quality work and have it done in the same way every time. Andersen's approach, which coupled a really high ethical position and education and training focused on his workers, really set the bar high for Andersen. And the success of Andersen really ensured that the company would grow, that it would have many clients throughout the world, and some very large clients would be derived as a result of this philosophy. Andersen's growth eventually led to Arthur Andersen becoming one of the big eight accounting firms in the United States. And these firms particularly grew in light of the 1929 stock market crash and subsequent legislation in 1933. Actions that were taken by the New York Stock Exchange essentially required companies to have a finance statement that had been vetted and had been looked at by accountants and auditors. Andersen's reputation, the reputation that Andersen had made for himself up to that time, put him in a really good position to all of a sudden have a large number of clients. As we've discussed, Andersen's success really led to growth, led to other business opportunities. The accountancy firm began to offer auditing services. It began to offer payroll services. It began to offer consulting services, and really grew. And this was the result of trust and loyalty that further made the business grow. In the last year of operation, the Andersen firm generated $9.3 billion in revenue, and it by then had evolved into a global accounting and business and consulting firm with about 85,000 employees worldwide. Andersen's signature or hallmark service really focused on the quality and inventiveness of the company's work and the consistency in which it was done. And the other element was that, the Andersen way really was applied across the board to all the clients. Now, one way to look at this is that it might be one of those kinds of situations that even though it worked for the clients and worked up to that point, It was also a process that kind of limited ideas and solutions to kind of the interculture of the business. It was an Anderson centric, if you will, point of view, and there was a lot of pressure that were put on the Anderson employees to accept the Anderson way, regardless of whether it was right or wrong, or if they believed that there was something wrong with it. So this firm's commitment to this process, which included training and recruiting and creating the Anderson way, and was also kind of an Achilles heel to Anderson. The Arthur Anderson way really became a groupthink kind of process that limited the decision making to the internal pecking order within Anderson. Ultimately, the decision makers became folks who either compromised their own ethical principles or looked the other way because of the enormous financial gains that were to be made by making these decisions. As Anderson grew, the company split into two divisions, one accounting and the other consulting. The evolution of business in the world ultimately began to produce large results for the consulting side of Anderson. This eventually produced a lot of dissension among the partners, and in 1989 the accounting and consultancy groups split into two different divisions. The balance of the business, the larger balance of the business in terms of fees, was going to the consultancy side, and the accounting side needed to, in order to financially stay up with them, needed to begin to find ways to generate revenue. This put pressure on accountants and auditors to essentially find things to bill for. So the emphasis began to swing away from the integrity and ethical side to essentially how much you could bill for. Anderson's deterioration and failures accelerated after the split between the accountants and consultants. In 1998, Anderson paid $75 million to settle shareholder suits arising from the waste management scandal. In 2001, Anderson again paid $110 million to settle shareholders' claims of Sunbeam. In 2002, Anderson paid $10.3 million to settle shareholders' lawsuits in Boston Market. By the time issues concerning Enron began to surface, Arthur Anderson had already been involved in multiple situations that questioned their consulting and accounting practices with regard to other companies. The founder, Arthur Anderson's idea that ethics should come above profit had totally flipped. In the beginning, Arthur Anderson was successful because it insisted upon a clear set of ethical guidelines. It molded and mentored first-class accountants, and together they grew. Arthur Anderson insisted upon integrity and honesty, kind of a one firm, one voice process. And in training, he shared that method across the entire organization. Arthur Anderson began to change when the consulting arm of Andersen began to make more and more money. And this ultimately culminated in 1989 in the accountant or the consultant group seeking autonomy and so they could practice on their own. This led to really a major shift in values because up to that point the value had been really a principal value based on the information being correct and the accountant being independent and the auditor being independent of others to make judgment decisions. Consultancy then kind of changed that to more of a client service, and they began to instead of looking at what the regulatory needs were as the auditors did, they looked at what the business needs were of the company. And this began to really change the whole face of Arthur Andersen. Arthur Andersen had been one of the largest, most ethically sound accounting firms in the world. They followed the principles of their founder, Arthur Andersen, who tried to instill an ethical basis for the operation of the accounting business. They were seen and perceived to be honest and have integrity, and they also made their whole being about this trust level with the public. In other words, part of their personality was that they had integrity, that they could be trusted, that their word was their word. And Arthur Andersen basically talked about to talk straight and to use straight talk. So what happened was is that they fell from this and they began to double talk. And as the consulting group became more powerful and began to generate more revenue, one of the elements that was involved in their consultancy was double talking. And even though they really had, really no other responsibility to the public, they presented themselves as somebody who was responsible to the public. They had responsibility to their clients. But they fell down and they failed upon this ethical responsibility that they had promised the public and to put themselves out there to be, primarily because of the consultancy money that was generated. They got themselves into a big problem that they continued to have to feed. So Arthur Andersen essentially betrayed their own ethical position of being honest and ethical and having integrity through this process.